Hello everybody, so this video is entitled REAX Stock, the Real Brokerage, firing on all cylinders. And we're going to talk about this stock who had an amazing week to say the least. It's up 32% over the past 5 days. To be fair, this was one of the stocks that had been sold off for no reason whatsoever. I guess some fear on an acquisition which is going to double their size anyways. That fear triggered an intense sell-off in the stock. That, coupled with an increase in the 10-year yield and an increase in mortgage rates, that was enough to drop that stock down to like the 160, 150, 170 range for many weeks. It had no business trading down there. It's back up now. It's up 32% in just a few days. And why wouldn't it be? Why wouldn't it be? Well, it should be up this much because this stock is actually the broker that is winning the marketplace right now. Back in the day, it used to be Open Door, in my view. Open Door was really an amazing company back in the day. Probably still good. I still need to cover it. I'll cover Open Door again in one point, but it's clear to me that over the past 5 years, right, so since 2021, one broker has taken the best agents from all the mom and pop brokers, and that broker is Real Brokerage. In fact, I'm going to guess that if you walk in your neighborhood, in your side of America, you will find a few signs with the Real logo on it. In my neighborhood, I'm now at 3 or 4 signs that I've seen of realtors who have left their legacy brokers and who have just gone on their own with the online brokerage platform that is the Real Brokerage. It's an online brokerage. It's fully online. It's way lower cost for the real estate agent, and it still puts the real estate agent at the center. That's kind of a difference with an Open Door who was trying to entirely do away with a real estate agent. And Open Door was trying to just pay them $25 an hour to show houses and get them out of the loop. Real Brokerage is just taking away top agents from legacy brokers, cutting in half their commissions, right? Taking half less of their commissions compared to legacy brokers, and growing like this by focusing on just recruiting the top 15, top 20% and having them onto the platform. They have a very interesting commission structure that leads a lot of top performing agents to just join Real Brokerage and quit, Century 21, Howard Hanna, whatever it's called in your neck of the USA. And of course, this stock is up too, in my view. Some of that increase in price has to do, at least the increase from yesterday, right, has to do with a 10-year dropping nicely, especially at the beginning of the day. It went back up midday, but especially at the beginning of the day, yesterday, Friday, the 10-year dropped nicely, and we had a much bigger change actually in the Fed estimate. Now, the 56% odds that we're not going to get a rate increase in September. This has markedly changed from 3 days ago, where market participants were all saying we're going to get a rate increase in September. It looks like we're not going to get a rate increase in September because of a quote-unquote poor jobs report. And I want to report, of course, on Q2 here, but here's the thing. We have to realize that this Q2 is a little strange, because, of course, it doesn't include the acquisition. The acquisition is the REMAX acquisition. So, like I said, the stock dropped because they announced acquiring REMAX, which is a very big broker in the US, and once they acquire REMAX, it will double their size. But that acquisition is scheduled for the second half of 2026, and the vote is scheduled August 14. So all of the numbers that I have in my spreadsheet and that I have in the next slides, those numbers do not include REMAX, and that's a big deal because the REMAX acquisition should, per my estimate, per what I see, it should roughly double their size. It should roughly double their revenue. So anyways, let's look at the valuation, assuming there's no acquisition of REMAX, assuming it fails. Let's look right now at the valuation. The valuation of REAX right now, after the wild increase of the past 5 days, after an increase of a third, that valuation on enterprise value over gross profit, over revenue growth is still a 0. 0.04. The rule of 40 is there at 54. So if you were to compare to other stocks that I cover in the channel and that I consistently keep calling cheap, then REAX, the Real Brokerage, would be 3 times cheaper than HIMS. And HIMS is kind of the poster child of the cheap stock that I cover in this channel. So REAX would be 3 times cheaper than HIMS. It would be 4 times cheaper than Nebius. But more importantly, REAX's base, we're talking about a $400 million company. A $400 million company. And so that's the whole theory, law of large versus law of small numbers. 400 million going to 4 billion, that's a 10x. Is this something that we can envision in a relatively slow amount of time, relatively short amount of time for REAX? My answer to that is yes. We need an alignment of planets. We need their numbers to keep going back up. We need them to keep attracting new realtors, right? And by the way, they've never went down. The numbers of REAX have never went down. We just need the numbers to keep going up. And we also need a drop in interest rates, maybe a pickup in the real estate prices, and you could have the perfect ingredients for a stock to be a multi-bagger, perhaps even a 10x. So that's one point. Another point about the growth is, and this is going to be a big debate about this stock, is what's going to be the next 12 months sales growth rate. I have it at 51%. 51% is the analyst number that I see on several websites. But could it be much more than that? And my answer is it definitely could. First of all, if you look at the historical growth rates for REAX, it's been 120% for the past 5 years. It's been 60% for the past 3 years. But in my view, this is going to explode when they close on the acquisition of REMAX. Because when they close on the acquisition of REMAX, what are we going to grow our sales at for the next 12 months? Is it going to be a double? Is it going to be 100%? It could be very much 100% because that acquisition is closed. Now, I know Wall Street doesn't like acquisition, doesn't like growth by acquisitions, but unfortunately, in some sectors, you have no choice but to grow by acquisitions, right? Banking is the most famous sector, but I believe real estate is such an entrenched sector with a hyper-local market, with local regulations, state regulations. It's complicated to grow sometimes, and acquisitions really speed that up. So what's the next 12 months growth for REMAX? I put it at 50%. I think it could be more than that. Note that even if you were to be pessimistic and say, you're going to say it's going to grow 25% next 12 months, so you think the acquisition is going to fail, you think there's going to be a big crisis in real estate. If you were to put 25% here in my spreadsheet, your EV over GP over RG would be a 0.08. You would be still about 50% cheaper than HIMS. You would be still 2 times cheaper than a Nebius. So at this point, how much cheaper can you get? I think this stock is just too cheap. And this is where I get into the Q2 PDF, the Q2 number of investor presentation. And this presentation reminds me of, say, a company like SoFi, for example, with no dents, no bump in the road whatsoever. And this is despite the fact that real estate is supposed to be cyclical. You're supposed to have cyclicality. I invite you to look at, say, for example, agent count. I don't see any cyclicality. Agents are just joining REAX, leaving legacy brokers, joining REAX to get those cheap broker fees that the legacy mom and pop broker with maybe a building, maybe a secretary, maybe local advertising does not have. If they are moving to REAX because they want those cheap fees. If I look at the transactions, the closed transactions, I don't see any seasonality in those numbers. And real estate is supposed to be seasonal. It's just that you have hyper growth rate all along. If I look at the value closed, right, the value of the real estate transactions that they've closed, it's just stellar growth, unabated, no stop. We're talking about $94 billion worth of value of real estate closed, up from $88 billion, up from $75 billion, up from $69, up from $62, up from $55, up from $49. This is as clean of a growth curve as you get as far as the value, the velocity of the money, the size of the money that goes through REAX and that goes through the REAX commission. That's how they make money. Now, if you look at something disappointing, but that doesn't depend on them, that's the median home sale price. It has barely not changed in the US for, let's call it, 3 years. Yeah, I mean, that's roughly it, right? You know, 2 years and a half ago, it was 270. Now 370. Now it's 399. Unfortunately, real estate as an asset class has been lackluster, to say the least, but they don't control that. And when rates go down, my guess is that the average price of homes in real estate will go up. And when the average price of a home in the US goes up, what do you think is going to happen to those gross market value, LTM? I think that's going to go up even more. I think revenue is going to go up even more for a company like this. Also note, as far as it goes, they have very stable gross margin. Now, you do see some seasonality in the margin, and that seasonality has nothing to do with real estate here. Why is Q1 better margin than Q4? It's because of a commission system. In the way they set up the commissions, REAX takes a much bigger commission at the beginning of the year and a much smaller commission at the end of the year. That's because after a certain amount of sales for top agents, the REAX commission drops or goes away altogether. So this is some sort of a manufacturer seasonality in the gross profit. The gross profit at the beginning of the year is always much higher than at the end of the year, because at the beginning of the year they can charge full fees. At the end of the year, they have to give out discount to their top realtors. But nothing wrong with that seasonality. I don't really see any trend. It's roughly flat. But where I see a good trend, and this is worth mentioning, it's in their operating expenses. Their operating expenses have been going down and only down for the past 3 years. So this is the right direction. You have a business with sales up, revenue up, operating expenses down. And so, of course, what does that do? That creates a very satisfactory EBITDA for a business. That creates a very satisfactory free cash flow for the business. In their case, they use operating cash flow in their investor presentation. You know, on this channel, I like adjusted EBITDA. But anyways, let's assume the numbers are close enough. You can see the cash flow is only going one way, and it is up, and their cash pile is also going up on the balance sheet. They need some of that cash for that acquisition, but you know, there's also going to be some splits in the stock and some change in the way they acquire. So by all means, this is a stock where now I'm waiting to see what happens with the REMAX acquisition. I'm especially waiting to see what the headlines are going to say, how the market is going to react, because clearly this stock has been so headline driven. But over the long term, to me, that acquisition is good because they're going to double their size. Over the long term, that acquisition is good because all of the bloat that there is at REMAX, all of the extra employees, all of the legacy systems, they can change it all on the back end. Like, they can keep the front end, but on the back end, they can have their REAX platform and save a lot of money that way. I really see the synergies between the two. But this is a business that keeps firing on all cylinders. And, you know, this is not my first time comparing this business to SoFi. It's under the hood, the growth is easy to understand. The numbers are easy to understand. This is a business much easier to analyze than, say, I don't know, a Coinbase or a Bitcoin miner. No. This is not that type of business. This is a type of business where, you know, numbers go up, expenses go down, profits go up. It's that simple of a business to understand. The big red flag of this business, of course, is the macro. What's going to happen to the macro? It's a more macro-dependent business than HIMSS. HIMSS, you take a business like HIMSS, people are going to take their hair loss and their ED pill no matter what the economy does. This is not exactly the case for real estate. Real estate is highly dependent on interest rates. So this is still a business that's highly dependent on interest rates, and we need interest rates to come back down for this business to truly explode. But nonetheless, seeing it up 30% on a report that pretty much highlights the steady ediness of the business is a sign that Wall Street is still highly immature, still highly manic or highly depressive, whatever you want to call it, whatever season, and still is in big weighing machine mode for this business, because it's, in my view, it's too cheap. It's way too cheap. I mean, and even some compared to Zillow. Zillow is trading at a 0.2 and change. Now, Zillow is software. But they have some software on the back end too, and they're a highly digital business too. So, you know, I could make a case that REAX is also a little bit of a software business. Stock is still too cheap. I don't get it. I'm happy to see the bounce 30% 32%. I'd be wary with the acquisition. I want to wait and see what happens with acquisition, and especially what Wall Street thinks, how Wall Street reacts, what articles get written. But eventually, once the acquisition is done, the market will forget that they acquired the company, and they'll be judged as a new company, and we will start all over again. But I'm happy to see the stock up a little bit, but this is a super long-term hold as far as I'm concerned. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.